Hi everybody, it's me, Greg Mannarino. How are you today? It is Tuesday, February 24th, 2015. People, what is occurring right now is nothing short of, frankly, incredible. And that is the truth. What am I talking about? Well, the world got uh, two huge pieces of news. I don't know what you want to call it, straight out of the world central banks, letting again the world know that they are in control and they are going to continue to do things that are shocking. I've been saying that for quite a while, but let's elaborate. Today, let's start with this. Janet Yellen is testifying before Congress, basically blowing sunshine up the crack of this market. I think unlike anything that we've seen yet. She is sitting there at this moment. I am doing this video blog, talking about how rate hikes are pretty much off the table at this point. And why is that? Again, we've been told by the mainstream media and the financial channels that our economy is doing great. We're adding jobs. Everything is just rosy and shiny. But Janet Yellen said specifically, and this is a quote, there is significant slack in the labor market and housing remains sluggish. This goes completely against the mainstream narrative. Now, she did go on to say, after all this, that the economy is getting stronger. Of course, she has to throw that in there. So what did this do? Again, it threw the markets into rally mode, which they're in right now. And when she was asked further about rate hikes, again, patience is the word. Basically, again, just taking this off the table. No surprise to a certain degree. I personally expected to be somewhat a little different with her tone, but again, there's no ambiguity here. She made it clear that the Federal Reserve is going to continue to suppress interest rates, and you saw what happened to bond yields today, and the whole entire yield curve came down once again. So this is just, again, broadcasting to the markets that the Federal Reserve is going to continue to distort it, much worse than it is at this particular time. And that, again, in the short run is okay. But in the long run, all it's creating is a much worse issue we have to deal with down the line. It's kind of interesting how markets react. So we find out that through the words of Janet Yellen, the labor market is not good. Housing is not good. And the market, bam, just takes off like a rocket. I think it's up like 90 points as I am doing this particular blog. I'm referring to the Dow Jones Industrial Average. And the other side of this thing here is what's going on with Greece. They have confirmed the cave-in. I held out just a little bit of hope that maybe, despite their tentative agreement just last Friday, that something would come out. But no, they have absolutely caved at this point to the demands of their creditors. The debtor always loses here. Understand, and that plays right into the United States being the biggest debtor nation the world has ever known. So the Federal Reserve, going back real quick, has reiterated that they need to stay in emergency mode. Think about that. We are, years status post crash of 2008, and the Fed needs to remain in emergency mode. That means they will continue to require banks to buy debt. They will continue to print cash out of thin air at a blinding pace. I mean, these are occurring right now. People did a whole video about this just yesterday. And they will continue to suppress interest rates into the foreseeable future, further fostering this wealth transfer from savers, from the middle class to the upper echelon of society. And no one says a thing about it. It is unbelievable, really. And just going back to the Greek people, my heart goes out to them. It really does, because I think a lot of them held out hope that things would be different, and it's all the same. And it just goes back to the issue of debt, which is so insurmountable and so uncorrectable on a scale that is hard to put your head around. and there's no way out. There's no way out of it. Unfortunately, the Greek people are getting a hard lesson right now. We're all going to get it later at one particular time. And just going back to the Fed, again, I know I'm bouncing back and forth here. Interest rates are dropping. They will be going negative at one particular point here in the United States. I have no doubt about it, especially after what Janet Yellen said today about the economy. Again, despite her saying we're getting stronger, how could that be happening if the labor market is remaining, falling off of a cliff, despite what we're being told? Housing is not going anywhere. So it's all just nonsense across the board. But these two events are game changers, in my opinion, here. And this market is going to be pushed higher. What does that mean? I closed all my bets against this market, took losses. No way out of it. That's life as a trader. But I did take up a new position. I bought puts against MU. MU, October 30 puts. Right now it's down over 3%. So that's good. Well, from the short end. And we'll see how this plays out. I think it's going to continue despite this market probably going higher. Again, in the short run. But anything can happen here. I mean, nothing is real. It's very difficult to get your head around all this. But what we do know here is the central banks, at this time at least, well, no, they've completely won. They've absolutely won. I did a whole video about it. Check my channel. Click on this little head here. I went over how they have won. And there unfortunately really isn't any hope for change, for debt forgiveness, or whatever you want to call it. It's not happening. The world central banks have got the governments of the world and the people in a spot that has done nothing but create debt slaves across the spectrum. And that's very sad to think that, our governments are bought and paid for. And the people under them, under the ruling classes, because that's what they are, and they have their ruling class, obviously, which is the central banks, have done nothing but create a world of debt slavery, of which there is no escape. Again, unless we keep betting against their system, getting out of their system, because at one point, all of this is going to have to correct to fair market value, and that is going to be the moment that we're all going to remember for thousands of years, because this whole thing is just ugly with price discovery mechanisms that no longer exist, distortions, capital misallocations. It's incredible. But this is what is being created at this point on purpose, because the world central banks are creating bubbles on purpose, no doubt about it. The debt bubble is being hyperinflated, which is hyperinflating a stock market bubble, which is suppressing other asset classes to the point of so far beyond ridiculousness. It is absolutely frightening. All right, with that said, I'm going to end this video, and we'll see where how this all plays out as we move forward. That's it, people. See you tomorrow.